Hello traders, Gary Wagner here, approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, June 17, 2021, and this is the Daily Report for Gold and Silver. A virtual meltdown across the board in the precious metals and industrial metals complex today. We had palladium down tremendously, about 12%. We'll talk about all of that. Also included on today's show, below this link is a link to an interview I did about a week ago with Cambridge House's Jay Martin. The show begins now. In response to the FOMC meeting, which concluded yesterday, indicating changes in their monetary policy, we had a virtual meltdown in all of the metals, precious and industrial. Gold currently down $87.10, trading at $1,774.30. Silver also lost almost 7%, a total of $1.86. It's at $25.95. Platinum gave up $80 in trading today, $1,061 per ounce after a 7% decline. But it was palladium that suffered the greatest decline of the precious metals, losing $352, 12.5%, currently fixed at $24.84 per ounce. While dollar strength accounted for a fractional part of the dynamic gain, over the last 2 days, we have seen the dollar gain roughly 2% in value, currently fixed at 91.91 after today's change of approximately 0.8%. Traders, after the incredible plunge in gold over the last 2 days, I want to look at two separate gold charts with different Fibonacci retracement data sets. This is the shorter term data set that we're using right now. It begins at 1680 and concludes at $1,920, in other words, accounting for this last leg of the rally. And when we do that, what you see is that the lows achieved today occur very, very close to the 61.8% Fibonacci retracement, $1,769.30. You can see current trading in Australia is up from the lows, but clearly right near the close in New York today. This could be a price point to find support. If it doesn't, the next level that you would want to look at would have to be $1,730, the 78% Fibonacci retracement from this data set. We have clearly broken through all three major moving averages, the 200, the 50, as well as the 100-day. So I'm going to recommend that we still let the dust settle to see if it's going to trade lower or find support in this area. This next daily candlestick chart has a much longer fib retracement beginning from the lows in March 2020 when gold was at about $1,450 up to the record high at approximately $2,088. What you can see is that the lows that come in current pricing match up almost to the penny with the 50% retracement at $17.68. Currently, we are tracking right at that price point. If it was to break, according to this chart below it, we could see it trail as low as the 38.2% fib retracement or the double bottom slightly below that. Again, it is a little too early to tell whether or not it will find support, but in both fib retracements that we're looking at, you can see that the lows achieved today were at critical price points. And so it means that we need to look to see how market forces take either gold lower or find some support in this particular area. However, copper is in a unique position because there is selling pressure due to the FOMC statement, as well as China releasing a lot of their copper from their state stockpiles. They're doing that with the industrial metals. However, in the case of copper, I believe that demand will outstrip anything China can do, and at some point we'll see a dynamic bottom in the market and a potential to see this market climb to new record highs. Clearly, copper is reacting to dual forces here. The FOMC meeting forced all of the precious metals lower, but prior to that, China began to release copper from its state stockpiles. As in any intervention by a major country, whether it's a currency or a commodity, all that country can do is to slow the natural descent or ascent of that market price. In other words, copper is going to move based upon supply and demand. Right now, more copper has been released into inventory, and that's what's pressured prices lower. However, we want to see how it reacts because we are at a particular price point where I think we could still go a little bit lower. We broke through the 100-day moving average on a closing basis today. We are still trading below that. We have some price support, not based on fib retracement, but based on actual bottoms in the market. And I'm speaking about the occurrence of $4 copper, really at the beginning of January and February of this year. Below that, we have about $3.90. That's based upon this bottom. And we have 377 as the 38.2% fib retracement. It's a long data set, just as in gold's long data set, from March up until, in this case, May of this year when we went to a record high. It is for that reason we want to take a serious look at re-entering the copper market once we have defined a bottom of the market, and we could see it surge and break above its all-time record high. I still believe copper will move to $5 by the end of the year. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Have a great day. Bye-bye.